roughly in that area in advance. So based on these two cycles, I can predict this sell cycle here. And if I can predict that sell cycle, I can predict this buy cycle. So the last sell trade was predicted and the last buy trade was predicted in advance. It doesn't mean you just jump into them. It means that you start looking for them. And then we see that perfect kind of 56 trade coming in here because we run the sweep to the liquidity high. We have the Frightener candle coming in here, so we get the 56 candle coming in there. We then see the opportunity to do a 56 trade coming away from that price area there. And we get a brilliant short sell coming back into the cycle, low back into this phase here. It's on your trade log. So you can use it. You can utilize that information live on your trade log if you want to use it. There's nothing unusual about it. It just takes a little bit of extra work. So you're obviously now looking at this and saying, you didn't know that this was a cycle high, of course, at that stage. Because that cycle high there is generated from this buy here. So when you look at that, you can now recognize why there was a big seller into this price area here. Why there was a seller here, why there was a seller here. You can now see why that took place. Okay, it's hindsight, but you can still see why it took place. You can see what they did here when they frightened everybody off this trade, and they ran a Frightener candle right in there, couldn't they? So they ran a Frightener right in there for the buy trade, and you can see why that buy trade came in. You'd already been aware for that buy trade because you already had that cycle low here, so you know that this is a Frightener probably, unless there's a massive drop-off in value. So you can see these ideas. It's so incredible when you start getting into the mathematics of market making. Now, locals didn't do this, but locals did do the concept of timing the market properly. They go through these big top of the hours and bottom of the hour arrivals. That's what we're saying. The market makers were always aware and always available for the top of the hour, bottom of the hour, quarter to, quarter past the hour, because that's when the big commercials came into the pits to do business, because these were the big volume times. So with the big volume times, the market makers switched on for those volume cycle narratives. You can see that this sell trade in a sell cycle took place at top of the hour, 9 o'clock, didn't it? So now you're starting to recognize something else. This buy trade in a buy cycle took place just after 11 o'clock. So you can see that within that period, a cycle high at 8 o'clock, the big sell comes in at 9 o'clock. The cycle low at 10 o'clock, the big buy trade comes in at 11 o'clock. You know, and you start recognizing that that might be a thing. You start looking at, if that's a cycle high, you're now looking at this at 1300 hours. It's a cycle low, so you're not obviously going to be selling it. But when you get a pullback shortly afterwards, you're looking at that and saying, okay, it is what it is. I'm now going to sell that little rotation. As I said, it might sound as if on the face of it, as if you simply can't buy into this as a concept. But as I said, by the time we reach the classroom, hope is that you'll start to recognize why this makes a little bit of sense. So you can see we told you this would probably get capped, even though it looks like a great sell. Well, it seems as if the market maker's doing a great job of capping it, doesn't it? So even though the value had been absolutely trounced on oil, the price hasn't sold off yet. So it seems as if they're trying to do what we suggested they would be trying to do. And obviously the idea here is if that lines up, well, it lines up. If it doesn't, it doesn't. I mean, we're not predicting it is going to line up because that's all depending upon how good or bad the value does. But it's a starting point for a conversation, isn't it? And that's all it is. The interesting thing is on equities is if this cycle is right, the equities should sell off at the London close, half past 4. So if the cycles are correct on equities, the sell should come in at 4:30. If the market makers are running that particular little cycle narrative. So that's interesting in its own right, isn't it? Does that mean it's going to be 4:30? Well, I don't know. Does that mean that we start looking at it from that cyclical point of view? Sure. It's just another piece of information. It's another piece of information. That's all it is.